Good evening, everyone, and welcome to the episode number 11. Today, Ivan and Dragan, your hosts for tonight, will be speaking about the real estate prices, and effects that are influencing the prices of the real estate. Ivan, hello, how are you doing?
Hi, I'm doing great, thank you.
All right, that is nice to hear as always. So, we are still witnessing the developments regarding the crisis. Many things have changed, but still many questions are with us. How would you comment the situation in the market for the real estate, globally speaking?
Uh, Real estate has a delay in its response to these crises. So it doesn't act like the stock market. It doesn't act like the price of gold or the price of Bitcoin. It's slower to act. So it takes months, sometimes years, for real estate prices to reflect the economic realities of a crisis. However, I anticipate a fall in real estate prices overall, especially in some overvalued markets. They will be most affected, I think. Markets where it takes an average worker something like 50 years to buy a house, those markets, real estate in those markets is going down.
Okay. Real estate markets and the price of real estate, it is very important component in the monetary policy design. We all have seen that the monetary policy is following some unorthodox steps and some serious changes have been introduced recently. So maybe we can provide some concepts and ideas that are going to be effective in the short run. As you can see, many people are doing their jobs from their homes. So many things that are considered around understanding of the working place have switched to home place. So do you think that it will also influence the price of the real estate, the overall understanding of that market, or not?
Of course, it's gonna affect real estate because there's a distinction that must be drawn between commercial real estate and residential real estate. Commercial real estate, as in offices, that was even more overvalued than residential real estate, and that's gonna suffer a huge fall because many companies are now downsizing. Many companies will no longer be operational; they will go out of business. Many companies, even those that will not go out of business, they have realized in this crisis that they can actually have people work from home, and that cuts down on their costs. Also, retail has moved online with Amazon and other online retailers becoming more prominent, which means that brick and mortar stores are going to lose prominence, especially malls, more expensive stores. So overall, commercial real estate, there's going to be a big downfall in the prices of commercial real estate. In terms of residential real estate, also I expect a downturn because first of all, people are losing their jobs, which means that there's going to be less demand for real estate, especially in big cities, especially in overvalued markets. The Bay Area, for example, LA, New York, London, Sydney, Melbourne,
Mm-hmm.
cities like that. These markets have pretty much insane prices right now, or they had insane prices up until a few months ago. But as I said, real estate there's a delay because first of all, if a seller thinks that they're not going to be able to sell for the amount that they think the real estate is worth, they're just going to take the listing off of the websites. They're going to wait. They think that, for example, now you can't find a buyer at 100% of the asking price, and so they're
Mm-hmm.
gonna wait because they think that maybe after the pandemic is over, maybe the
Mm-hmm.
economy is gonna bounce back, and so the prices are gonna go back to where they were before.
Mm, will that happen?
No,
Mm-hmm.
and Also, you have buyers now who are waiting for prices to go down because those they're buyers, of course, and those buyers who have money, they know that the prices are going to go down because prices have to go down. So uh, they're not buying right now because they see that the market is still overvalued and they're waiting for prices to go down by another 30-40%. That's when they're going to buy.
Isn't that a bit dangerous? I mean, the crash in prices for 30 or 40% is going to be a bit detrimental for the other industries that are closely connected to the real estate.
Yes, but real estate, you have to remember that the real estate market is one of the worst types of investments because if you invest in a company actually produces something. It produces new value. If you invest money in real estate, it's just a house, it doesn't produce anything, or it's just office space, it doesn't produce anything. So if real estate is overvalued, first of all, normal people can't find a place to live because it's very expensive to live there. And also money, resources that should fuel the development of the actual economy are trapped in this real estate bubble. And we have seen that over the past, say, 20 years. And hopefully, real estate prices will go back to their historical mean so that these resources can be used more efficiently by the rest of the economy.
Would you be kind to explain what you mean by historical mean? I think that not many people understand that term.
Uh, it's it's important to think of the price of housing, not just over the past 10 years or 20 years, but over the past 200 years,
Mm-hmm.
to see how much a house used to cost 50 years ago or 100 years ago.
Mm-hmm.
And it's difficult to see it in modern currencies because modern currencies are uh, have inflation baked into them. But if you look at the price of housing in terms of the price of gold, for example,
Mm-hmm.
you see that it's much more expensive right now to buy a house or to buy commercial property than it was 100 years ago. And actually, it should be the opposite because there's been so much new construction and
Mm-hmm.
it this doesn't make any sense economically. So real estate is overpriced, significantly overpriced, and it will have to go. I mean, everything eventually goes back to the historical mean. And the same will happen to real estate. If you look at the actual prices of real estate, there was a bit of a boom in the 1920s, but then when the Great Depression hit in the 30s, prices went down, and then after World War II, prices were still below the historical mean, and then by the end of the 1970s, the prices started going up slowly, and we've been in a bull market for real estate for about 40 years now. So this has to go down. I don't see any way out of that.
Mm-hmm. Okay, good. Interesting. Just to put one small disclaimer here regarding our podcast and discussions here, we are not actually offering you any investment advice. As you can imagine, I think that both of us agree on that.
Of course,
So
this is just our personal opinion.
this is our yes, this is the personal standpoint of the situation. Good, very nice. What about the traditional markets where the real estate is actually the store of value, like in Mediterranean countries, in the Balkan countries? Do you think that some changes will be possible to observe there?
In the Mediterranean countries, yes, especially because here's the thing: people used to buy real estate because they thought that they could get money from renting the real estate, right?
Mm-hmm.
And lately, for example, Airbnb has been very popular, but many countries, many cities have been banning Airbnb. And so you buy an apartment and you want to rent it out, you want to use, on Airbnb because you want to make money, but the city bans Airbnb or the country just outright bans it. They are increasing taxes, so you have to pay more and more. There are more and more regulations, and you're not going to be able to make money from this.
Mm-hmm.
If you buy, for example, in Spain or in Italy, even these very cheap properties. I mean, people sometimes ask me about these very cheap properties in Italy and Spain. Yeah, they exist. In France, they exist everywhere, but they're not cheap by accident. They're cheap for a reason. And if you look a bit deeper into it, you see that some of these properties are very old. Some of these properties need a lot of work to make them usable.
Mm-hmm.
Some of these properties are in areas that don't have any services. They're far away from civilization. They're not touristy. You can't really you collect rent from them. So if it's a lifestyle choice to buy property in, for example, Portugal or Spain or Italy, Italy less so, but Spain and Portugal have a really nice standard of living. And if you have sources of money from abroad, if you are American or British, you want to live in southern Spain, that's great. I mean, if you want to live there, that's fine. Everything's perfect. But if you want to make money from that property, that's a terrible idea because you're not going to be able to. You have potential returns of in a good market maybe 1 to 2%. But what's coming is going to obliterate the value of a lot of those properties because these properties, especially with the fall of tourism after this pandemic, they're not going to be able to make any money. And so I see, especially in some more expensive places in the Mediterranean region, I see prices going down by even more than 30-40%.
Okay. Can we buy something?
Well, if you want to, but do you really want to with all of these potential dangers?
Well, I'm not that risk tolerant person, so I doubt it. But okay, maybe I'll consider it.
There are much better places. I mean, I know it's difficult psychologically for a lot of Westerners, especially, to consider buying property in a place like Georgia or Armenia or Cambodia or a place that is not well developed, a place that is kind of sketchy a bit, but those places have potential. Those places can be developed, and they
They eventually will be.
they will be. And in those countries, there's low taxes. Spain has very high taxes on real estate. Italy doesn't really have high taxes if it's your primary residence, but if it's not, if you're renting it out, then there are high taxes. Greece has high taxes on real estate. So you have to see real estate for what it is. If it's an investment, it's not the best investment. It's actually kind of a crappy investment. You can make much better investments.
Mm-hmm.
If you're looking for 7-8% returns annually, you're not going to get that from real estate in Europe. No way.
Mm-hmm. Okay, let's move from Europe to other parts. Let's mention the situation in Russia. In Russia, the investment in the real estate has been really fluid and active during all those years. Many people made their fortune on it. And let's move a bit also to Asian countries such as Japan, Hong Kong, maybe even Eastern China, South Korea, and Singapore. In those places, the real estate is something like a luxury, no matter how small that actually is, because we've seen many of those reportages from Japan, for example. They are really like getting used to standard of living that requires like very small spaces. So what about the prices there? Russia and then the rest of the Asian world.
As pertains to Russia, Russia is a very interesting country. But real estate in Russia, outside of Moscow, St. Petersburg, and the Sochi region, the region along the Black Sea, I don't see it being very valuable. That's the unfortunate truth because maybe in the far eastern city, Vladivostok, maybe
Okay.
there, but in most of Russia, I don't see anyone making money off of real estate because real estate in Russia is not a good investment. I don't know if people can see a map, but Russia is big, and so if you want to live in a city outside of Moscow, outside of St. Petersburg, outside of the coastal area around the Black Sea, there's plenty of real estate. There's plenty of space. You can build a house. You can buy land for cheap and build whatever you want. It's Russia is first of all, Russia is not overburdened with regulation, and land is really the only limiting factor. And there's plenty of land in Russia. So building in Russia is not that hard. Unlike Spain, for example, or the UK or France, where it's very difficult to build, to get the permits, to get all of that paperwork
Certainly.
in order. In Russia, that's not hard. I mean, in Russia, you can easily, if you have the money, you can build whatever you want. And investors in Russia mostly target Moscow and St. Petersburg, and also the Sochi area, because the Sochi area is like the California of Russia, right?
Mm-hmm.
Because it has a nice climate, it has a subtropical climate. You see, it's along the sea. You see palm trees growing there. It doesn't look like
Yes,
Russia, and also the country has invested a lot of money there.
definitely.
Because of the
Infrastructure.
Sochi Olympics, yeah, infrastructure wise, new highways, new everything. It does not look like Russia. It looks more like California than Russia. So those places are expensive, and those places are gonna possibly, if you can find cheap real estate, which is under $1,000 per square meter, which is becoming increasingly difficult, that can still be kind of maybe profitable. Other than
Mm-hmm.
that, no. Russia is a no. Uh, in terms of China, China is a country that has extremely overpriced real estate. And China has a lot of regulations around who can buy real estate, where they can buy real estate, how many real estate units can be bought by a married couple, for example. So we've seen people getting divorced and still living as husband and wife, but getting divorced on paper so they can buy more properties, more apartments. There are ghost cities in China. There are cities that can house millions of people with zero or close to zero occupancy because people bought these properties as investments. The problem in China is that there is no developed way to invest outside of the real estate market, and that's a problem in many countries. In many countries, if you want to invest, it's not like in the U.S. where you can invest in the stock market or you can invest in commodities or you can invest in something like that. No, you have very very limited investment opportunities, and people invest in real estate. That's why the real estate market in China has been overheating uh,
For years now.
for years. Yeah, yeah, for decades. And another unfortunate thing in China is the quality of the construction. That is horrible. It does not meet any standards. It's literally it falls apart after 5 years. I don't think that can attract a lot of foreign investments. So it's difficult to see how you can make money in the Chinese market. I see a big real estate bubble pop in China. I think that China is going to be one of the worst in terms of the real estate bust. Another very important country that's going to see a big bubble popping is Australia. Australia has an extremely overvalued market. Australia has very expensive real estate for no reason, by the way, because like Russia, Australia is huge, and I see no reason for real estate to be extremely expensive. The government has been acting in ways that make real estate more expensive because they get stamp fees, they get fees from every sale, so they want the sales to be as valuable as possible, so that they get as much money as possible.
Mm-hmm.
But this has been, I think that this has slowed down the Australian economy significantly, even though the Australian economy hasn't really gone through a major depression, a major recession in 2008, and I think Chinese money has helped it a lot because a lot of Chinese investors bought property in Australia.
Mm-hmm.
But I think that now the bubble is popping everywhere, and it's going to pop in Australia as well. And another place that's very overvalued is Canada, because also Chinese investors, especially places like Vancouver, thousands of rich Chinese investors have bought properties there. That's another thing. Chinese because people in China can't invest in anything except property, and these Chinese investors that have money, they see that the Chinese market is not good because they see that they can't possibly make as much money
Of course.
as they have to pay. So they have turned to foreign investment, and these foreign markets have been growing, have been inflating because of this money, but they're gonna pop just like the Chinese market. New Zealand
Um,
also, England. That's another market. London is extremely overpriced. Again, Chinese buyers have bid the prices way up.
and the Russian buyers.
Well, some Russian buyers as well.
Well,
Also, New York. New York is extremely overvalued because for the same reasons. I mean, some Russian billionaires, many Chinese wealthy people from China buying condos, buying apartments in those ultra high skyscrapers, super thin skyscrapers, apartments that cost 20, 30, 50 million dollars. That's just completely ridiculous.
yes. Okay, and all those countries that you just mentioned, I mean, besides China, of course, and Russia, they all have very well developed financial system. They have the solid depth of financial system. They have solid financial instruments. They have the tradition of investments. So it's a bit strange that all of them are
No, they
affording,
don't.
so to
No,
speak.
they don't. No, they
What do you
don't.
mean?
That's
No, they don't.
that's a that's a that's a ruse. No, they don't. They really don't. In terms of China, in 2015, the Chinese stock market popped.
No, I don't speak about China and Russia. I'm talking about Australia, Canada, and
Oh,
the US, the UK. They all
oh,
have
okay.
good financial systems. I mean, good. Okay, that's a
That's also
relative thing to say, but
yeah.
they have the means to accumulate and to invest and to direct the capital. They don't need only the real estate to function as the case in China.
The problem with especially Canada and Australia is that their economies are based on commodity prices because Australia and Canada have a lot of resources. They have a lot of raw materials, uh, iron, nickel, I don't know, oil, gas. They produce all of that, and as long as the prices of all of those commodities are high, their economies are doing well. But right now, we in this pandemic, we've seen the prices of all of those commodities go way down, and so that's going to adversely affect their internal markets.
Hmm.
There's just no way around that. And I think that yeah, their economies do have some more financial instruments than Russia and China, but overall, they've fallen into the same trap because this myth that real estate can only go up, real estate can't possibly go down. Oh yeah, it can go down, and it's going to go down.
We didn't mention Japan, South Korea, and
Oh,
Singapore, and Hong
I
Kong.
forgot
We
Japan.
need to stress that as well
I
because of
have to
their
mention,
specificity.
yeah, in some of those places, real estate is at an extreme premium, I would say, because there's very limited space in Singapore and Hong Kong. You can't build anywhere. I mean, Hong Kong, there's actually a place to build, but the government doesn't allow it. So real estate is extremely expensive, and people live in tiny apartments. Sometimes they share, multiple people share the same tiny apartments. Uh, and the same is the case in Japan, but only in some places in Japan. Japan is very different from, for example, Hong Kong, because yeah, Tokyo it does have that, and large cities do have that. But there's also places in Japan that have extremely cheap real estate, and
Such as,
such as the entire island of Hokkaido, for example.
is it allowed for foreigners to buy?
Yeah.
Yes?
Japan allows foreigners to buy. Yeah, but that's because nobody wants to live there. Because there's low economic activity. It's cold. All of the young people have gone, and
Hmm.
so municipalities in Hokkaido are trying to attract people, but it's very difficult to attract people. And
Hmm.
also the Fukushima area and all of the north of that, effectively north of that coast, that area has been devastated economically after the Fukushima thing. So there's places in Japan where you can buy really cheap real estate, but it's like we've talked about Spain and Italy and France. I mean, you can buy it there. It's cheap for a reason. It's not cheap because it's a really good investment opportunity. It's cheap
Hmm.
because nobody wants to live there.
Okay. Logical. We didn't stress some interesting facts. Maybe if you have to add something on behalf of Africa or maybe Latin America, what about the real estate markets there? Would it
Real estate
be
markets in Latin America have gone up. Uh, a few years ago, it was very enticing. especially Colombia. Colombia is an up and coming country, and I think Colombia has a bit of a bad rap because of the cocaine stories, etc. But Colombia is actually a very fast developing economy, and Colombia should be considered for these types of investments.
Mm-hmm.
And other more developed, I would say, countries. Uruguay used to be hot a few years ago. Now it's not so much because they've adopted some socialist policies. Brazil, after President Lula came to power, also adopted socialist policies. So things are changing, but South America has some interesting investment opportunities in terms of real estate. But again, I have to stress for anyone wishing to buy real estate, wait for the prices to drop. By the end of the year, I expect the prices to start dropping. Within two and a half years, we will see real discounts in the prices of real estate. Maybe not in terms of dollars because there's going to be inflation, but in terms of gold, for example, definitely, or
Mm-hmm.
other commodities, definitely.
Mm-hmm.
And as far as Africa is concerned, the problem in Africa is the unstable political system. And this is a big problem because some countries are developing very rapidly, especially in Eastern Africa.
Mm-hmm.
Uh, Egypt, for example, is a country that has, I think, even now, some investment opportunities in real estate. But you have to consider that when President Nasser came to power, a lot of real estate in Egypt was owned by Europeans, by Italians, by Greeks, by British people. So he nationalized everything. And Alexandria, if you've been to Alexandria, you see it looks a lot like Cuba because all of these uh, old European-looking buildings
Mm-hmm.
that have not been maintained for 50 years. That's why that is because all of these buildings were owned at some point in the past by foreigners and they were
Mm-hmm.
nationalized.
Mm-hmm. Yes, the pretty much European legacies they're pretty
So yeah,
vivid.
so in
Yes.
Africa, that's the problem in Africa because it's a risky political environment. So even if the economy is doing well right now, you don't know what's going to happen in a year, in 2 years, in 5 years, in 10 years. And for real estate, it's very important to have a stable, long-term stable environment.
Yes, a bit longer term than the other financial instruments. Some of them at least. Good. Excellent. Even I think that we might conclude this episode by this story from the Egypt. And for the time being, I think that's pretty much it. In the next episode, we're going to discuss the cryptocurrencies. So I would like to say one big thank you for your valuable time and
Thank you.
presentation. And dear listeners, thank you very much for being with us through this episode. I hope to hear from you soon. Once again, have a good night and see you soon. Goodbye and thank you.
Bye.